Welcome back to the channel. And as always, if you copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to look today at a stock called Tidewater, um, ticker TW, excuse me, TDW. And first thing that we can see is that this is a stock that has some portion, a significant portion of short interest, which has been rising over the last few months. But at the same time, if we look a little bit deeper, the projections for the company are actually quite interesting. So let's take a close look. When we look at the actuals and consensus, we can see that this is the EPS projections that I'm looking at. We're looking at 150% growth scheduled for this year. And the interesting thing about that is that whilst the last earnings report was pretty good, the company warned that the performance over the second quarter of the year would be a bit slow. So if we go to Seeking Alpha, uh, TDW, let's have a look at that. So you can see how the earnings performed. So as you can see, it was pretty good. They beat by quite a bit, and they actually had surprise on the revenue. Now, for the next quarter, as I said, they expect that to be a little bit slower, and some analysts seem to agree with that. But where does that leave us? Well, we have a company here that overall, since May, has rising revenue, EBITDA, and EPS projections. And it is below those levels, as you can see it does here. So it takes a bit of time to catch up with that, but it eventually does. And in terms of valuation, is at 15 times. I don't think it's demanding by any means. This is middle of the road compared to some of their competitors. I prepared the screenshot here. So So we can see that when you look at how the competitors are performing, these guys used to be at a slightly higher valuation, and they're now middle of the road. So definitely not ambitious by any means, and I think there's room upside to get to a multiple that is in line with those competitors. So at the moment, like I said, the market is expecting the announcement of the earnings on the 8th of August to be okay, if not flattish. But what if that is already priced in? See how the stock has reacted, right? And we're sitting currently at just below 94, having crossed the 110 mark already. We were there just at the beginning of May. And so I think there's the potential to retest that level if the next earnings are good. But there are other reasons why we could see the stock price being bolstered aside from earnings. So first of all, management overall feels encouraged about the outlook and demand over the coming years. Their vessels, I had to look at how they compare to the rest of the market, the competitors, and they have a pretty good mix in terms of the quantity, but also the age of the vessels. So after that earnings, they reiterated full guidance. That's all good. But also, what I think is happened as well is that the oil prices since the last month or so, they have also recovered, right? So everybody was expecting lower levels around here after this drop, but this oil price is recovering, and that will be beneficial for them. And that's a trend that could continue down the line. And one of the headwinds in terms of the results was their operating expenses, primarily driven by uh, by um, the salaries. So higher salaries that they have to pay to their employees, their crew. But now we have rising unemployment. So I think this is no longer become a hindrance for the earnings. Aside from that, there's quite interesting KPIs that we can have a look at. So if you look at how the company has been performing on a quarterly basis, you can see that the EBITDA margin has been steadily growing, getting better. Uh, the same goes for the financial metrics such as free cash flow. And most importantly, in terms of operational KPIs, you see a growing average day rate for the fleet and a higher operating margin for the vessel. Now, all these factors are going to be, in my opinion, favorable for the company. And now the whole market is expecting for interest rates to be cut, likely happening towards the end of the year. We have seen already how the latest PMIs in the US have been eroding a little bit over the last few months. And so with every new report that comes, those chances are increased for rate cuts. So I think that the company could benefit from that, obviously, like any other. But this is something that they have announced already that they're looking at. So one of the things that they mentioned was that they are at a point where they think there's an opportunity for them to evaluate steps to establish long-term debt capital structure, which is more suitable to their business model. So at the moment, and this is from their investor presentation, you see how KPIs are going up. You got a lot of rates going on. This is all good stuff, right? Capacity, this is all positive. EBITDA margin coming up every year. Look at the debt. So these guys used to have a hell of a lot of debt, and they have managed to reduce that down significantly. And I think they continue to work to do so. But what they have at the moment, and this is really what's important here, is some commitments, right, in terms of debt that are taking place in 2026. And it seems to me that they are taking steps to work on arrangements that are going to be more beneficial for them. The probabilities of that happening as we enter a more benign interest rate environment are there. And I think this could be one of the announcements that we see in the next earnings report. So it may not be a matter of the stock being bolstered by great performance in a quarter. That can still be the case, but more about investors piling on the stock because of the expectations that the capital structure is going to become more efficient. So I think that could be a strong factor for this bullish thesis. So how to play this? Well, um, with with this kind of play, admittedly, it's going to take a little bit longer, and I want myself plenty of time in order to capitalize on all these things. We're currently just below 94, and I think the stock, like I said earlier, could reach the 110, potentially 120 in the medium term. So the way I'm going to play this is I'm going to buy a calendar, the 18th of October 95 calls, and sell an August 16th 105 call. So I'm getting a higher short leg. So the idea is that after earnings, the stock goes up, then it expires just below this level, and then it continues to go up after that. Maybe I can restructure after that. If it goes, to say 110 before that expiry, I still make money. But if I play it this way, I'm setting myself up for an even better risk reward profile. So that's all. Thank you for watching and see you soon.